Are you worried that taxes are eating away at your retirement savings? If you're a senior on a fixed income, I totally get it. Watching your nest egg shrink or stall out due to taxes is a real fear. Every year I see tax returns where people are paying a bunch of money in taxes on investment income. They probably shouldn't be. But what if I told you it doesn't have to be that way? The U.S. tax code got a big makeover in 25, and with that, a ton of opportunities have opened up for retirees to earn tax-free income. These aren't all just minor tweaks. Some of these are game changers. A lot of seniors don't even know these changes are now in place. But I'm here to fill you in on the top 5 ways you can start earning tax-free income right now. With that, let's dive in. Let's start with a major win, Social Security. For years, a complicated formula called provisional income meant that up to 85% of your Social Security benefits could be taxed. It was a headache, and it made every withdrawal feel like a tax trap. But here's the good news. As of 25, that's pretty much a thing of the past for most people, thanks to the one big, beautiful bill. Seniors 65 and over now get a $6,000 deduction on top of your regular deductions. And if you're married, that's $12,000. This could wipe out any federal tax on your Social Security benefits for a lot of people. Now, I know that's not everybody, but for a lot, that's a big deal. Now, the new rule does have income limits. If you're single and make more than $75,000, or if you're married and make more than $150,000, the deduction starts to phase out. But for most retirees, this could mean zero tax on your Social Security benefits, which is huge, especially if you implement the other items in this list. Zero taxes in retirement is possible. You've got until 2028 to take full advantage of it, so don't miss out on this Social Security opportunity. Now, next up is the Roth IRAs and 401ks. These accounts are probably the most well-known tax-free income source out there, and for a good reason. The way they work is simple. You pay taxes on the money up front now, but when you take it out in retirement, the withdrawals are completely tax-free. An additional thing many don't know is you don't have to worry about required minimum distributions with the Roth. So you can let that money grow tax-free for as long as you want. And if you've had your Roth account for at least 5 years and you're 59 and a half or older, you can withdraw both your contributions and earnings tax-free. That's a lot of freedom. You compare that to a traditional IRA where you get the tax break today, but you pay taxes on every dollar you withdraw later, and you have RMDs. With the Roth, you're making the smart move of paying taxes now and then enjoying tax-free growth and withdrawals when you really need it. If you're not looking at Roth IRAs and Roth conversions, make sure you subscribe. The one big beautiful bill has given you the opportunity of a lifetime over the next few years to completely take control of your taxes in retirement. Now, this next one is kind of a hidden gem. It's municipal bonds, or munis as they're sometimes called. You may not hear a lot about them, but they're an awesome tool for tax-free income. When you buy a muni bond, you're essentially lending money to a state, a city for projects like schools or roads. In exchange, they pay you interest. And here's the kicker, that interest is usually exempt from federal income tax. And in some cases, if it's a local bond, it can be exempt from state taxes as well, if you buy it in your own state. In other words, you can earn a steady stream of tax-free income just by owning these bonds. Generally, they're safe, reliable options for those looking for low-risk investments, and they won't add to your tax bill. Most people really don't understand the tax implication here, but let's say you get a muni bond at 4% or another investment for 5%. A lot of people choose the 5%, and why wouldn't they? But what if I told you the tax equivalent yield of that muni is closer to maybe 5.5 to 6.5, maybe even 7%, depending on where you and what tax bracket you are in? That can really add up over time. Just keep in mind, if you sell a bond for profit, you might owe capital gains taxes. But if you buy and hold, you'll be sitting pretty with tax-free income. Now let's talk a little bit about life insurance for a second. Did you know that death benefits from life insurance policy is usually tax-free? And that means when you pass away, the people you leave behind get a tax-free payout to help cover expenses or anything else they might need. And this can be a huge benefit, especially for seniors who want to protect their loved ones financially. Now, the federal government doesn't tax the payout itself, but if you have a large estate, you need to be careful with the estate tax rules. But for most people, life insurance is a great way to leave a tax-free legacy to your family. Now, we're going to leave this part out for another video, but I want to at least touch on it. Life insurance can also be another way to increase our tax-free income in retirement. There's a lot here that we can do that most people never even think about. We can even leverage it to protect against the rising cost of long-term care. If you're really trying to manage your taxes, you truly cannot ignore life insurance. Now, annuities. Annuities get a bad rap, but let's talk about annuities. Annuities can be a great way for seniors to get a reliable, tax-free income stream. If you have a Roth, you can invest it in a Roth IRA annuity, which allows you to make tax-free withdrawals in retirement. And another option is tax-deferred annuities, where you don't pay taxes on earnings until you start withdrawing the funds. So for seniors looking for predictable income, annuities can be a game changer. Just be sure to understand what type of annuity you're getting, as they come in different flavors. Some are tax-free, others are tax-deferred. Annuities have their place, but they need to be strategic. For many, it can give you the peace of mind you need so the rest of your portfolio that's not in the annuities can perform and help protect you from inflation long term. Annuities are not evil, and they've come a long way, but they need to be used properly. A bad annuity can have many hidden fees that are designed, let's be honest, to pay the salesman and not perform like you thought. So be careful with anyone who leads with annuities. I've got a little bonus here for you because I get this question a lot. So let's talk about it real quick. Selling your home can lead to tax-free income. Every year I have people call me who are selling their home and they're super worried about the taxes. And this one is often overlooked. When you sell your primary residence, you can exclude up to $250,000 of profit. $250,000, $500,000 if you're married. This is a huge benefit, especially for seniors who may want to downsize or relocate. All you need to do is meet a few requirements. You must live in the house, right? It has to be your house. You have to live in it 2 out of the last 5 years, and it has to be your primary residence. This isn't your vacation home. For seniors sitting on a home with a lot of equity, this can be a huge financial cushion in retirement. That extra cash can really supercharge your portfolio and add a lot of freedom in retirement. I mean, really, do you really need 4,000 square feet anymore? Maybe you do, and that's fine. But if not, your financial plan may have just got a big breather of tax-free income. So there you have it. 5 tax-free income sources, from Social Security to Roth accounts to munis to life insurance, annuities, and an extra one even for selling your home. And these can make a world of difference in your retirement strategy. The new 2025 tax laws have given us a real opportunity to take control of our financial future. It's time to make the most of it. If you found this video helpful, give us a thumbs up. Don't forget to subscribe for more tips on managing your money and taxes in retirement. And as always, be sure to talk to a financial advisor or tax professional to see exactly how these strategies can work best for you. Thanks for watching.